Hi everyone and welcome to today's More Report on Wednesday the 4th of May with me, Richard Perry, market analyst at Antip Markets. We've got a fairly neutral open on the European session, nothing too significant in terms of direction. FTSE slightly lower, DAX and CAC slightly higher. The Wall Street markets closed in the red yesterday, down around about 0.9%, and Asian markets sort of pretty much followed suit really, slightly lower, although the Nikkei was again closed for Golden Week holiday. Let me just show you the real movers though, the dollar. The dollar has rallied pretty strongly actually from yesterday's low. But look at that breakdown, 92.6 on that trade weighted dollar. Look at that massive support broken down. But was it a false downside break? Is the question, because we had a big strong rally intraday and we've sort of formed that support, the low. Now I'm going to show you through the technicals in a minute, and you'll see on those technical charts a whole range of reversal signals. The question is whether the market actually follows through with confirming those signals. But at the moment, certainly the dollar has strengthened slightly, and that strengthening has sort of relatively continued today. So that is interesting. The first sort of market that has corrected back in the last couple of days is the oil chart, but the oil price has started to find a bit of support again. And I would say as long as oil on the WTI contract continues to hold above 42.50, I think I'm happy with that. As a still continuation of this move, and I think the outlook will remain positive. But certainly the dollar is sort of managing to claw back some of the losses of recent days. Now, on to what we've got to look forward to today. Lots going on in the markets today, in the economic data streams anyway. So you've got the UK construction PMI at 9:30, expected to come out at 54.0, so no real difference. And to be honest, construction is around about, I think, sort of 5%, maybe 6% of the UK economy, so it doesn't really have a massive say on sterling, but it could have a little bit of volatility, so watch out for that. But the main data comes out from the US in the afternoon. Lots of US data. We've got ADP at 1:15. That's expected to come out at 205,000. It is a slight sort of harbinger for payrolls on Friday. I mean, payrolls and ADP are fairly much sort of in line in the last couple of months. So that's at 1:15. That could have an impact. Then you got the trade balance for the US. Now the expectation, according to Reuters, is 41.7. So that would be the lowest in terms of the deficit since February 2015. So that would be interesting, but exactly how that trade deficit is made up, you'd want to certainly see improving exports and lower imports to drive that, rather than just the lower imports. But certainly improving exports would benefit the dollar quite significantly. And you've got the factory orders at 3 o'clock, expected to be month on month plus 0.7. Which is actually on the year-on-year basis not really an improvement. It continues to fall away. And then finally we've got the ISM non-manufacturing, which is a big number because obviously we had that manufacturing PMI the other day for the US, sort of lower than expected. And it'll be interesting to see if the non-manufacturing ISM data can hit that expectations at 54.7, which would help to improve sentiment for the US generally. But in light of how the ISMs have been coming out recently, remains to be seen. And finally, we've got the crude oil stocks at 3:30, 2.5 million barrels there, the expectation, and it will have an impact on the oil price. So that takes me to my chart of the day, which is silver. Now, silver has been strongly higher actually in this uptrend in the last sort of 4 weeks, but that uptrend now seems to be breaking down. Not only that, you've got a bearish engulfing candle, new high, and it closed below the previous session's low, and that is on a volatility move as well. So that was on Monday, and that confirmed yesterday by the breakdown of this downtrend as well. That's continued today. Look at the momentum indicators. You've got a basic RSI sell signal crossing back below 70. Now, last time we had one of these, we saw a decline of a couple of weeks on silver, so we could see this moving. You've got the MACD lines, which are now sort of coming together. You've got the stochastics, which have crossed over and are right on the brink of confirming that move, and certainly if they fell below the reaction low of late April, I think that would be a confirmation move. So it certainly seems as though the prospect of a correction is growing. The big support, I think, comes in at 1670, which is this reaction low that we got. 1672 to the pip, but 1670, which is the reaction low that we got through this consolidation period, sort of mid-late April. Now here's the hourly chart, and you can see also, I didn't mention it in the more important, but the 144-hour moving average hasn't really been traded below consistently yet since that run began, and now it is beginning to trade below that consistently. Also, the momentum indicators, look at the hourly RSI, that is consistently negatively configured. The hourly MACD line, the hourly RSI seems to be falling over around the 50s level now. So rallies are seen certainly in the last couple of days as a chance to sell. So you got the initial resistance today at 1747, but the main resistance starts to come in with yesterday's reaction high 1772, and obviously 18 figure was that big high on Monday. So it certainly looks as though silver is starting to build a correction. I'll show you the gold chart, which similar sort of corrective move. It looks to be possibly coming through there. So precious metals possibly under a little bit of pressure as this dollar has started to strengthen again, or recover, I should say. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thanks.